Hey guys, I've got a very important news just now in regards to cryptocurrency regulation here in India. So guys, let's try to understand, let's try to break the news. So this news just got published on CCN that India may levy 18% tax on cryptocurrency trading starting July 2018. So let's try to understand. So India, as the world's second largest country by population, may soon give a glimmer of hope to cryptocurrency investors after months of propagating a negative agenda against the digital asset class. As reported on Bloomberg, India may soon levy an 18% GST tax on cryptocurrency trading, notwithstanding the legal ambiguity in the country. Currently, the proposal is being considered by the Central Board of Indirect Taxes and Customs and shall be presented before the GST Council after it's finalized. So that means what they're trying to do is, guys, as you all know that from July, the banks will shut down their relationship with the crypto exchanges. So there could be two scenarios. Let's try to read further more and then try to discuss the conclusion. So in April, the RBI practically killed the cryptocurrency industry in the country as it passed a statement asking all banks to withdraw their relationships with all crypto exchanges, including ending all banking services within 3 months of the directive. So according to people with knowledge of the matter who requested anonymity, the Income Tax Department has realized that importance of taxing virtual currency. So they really understand this shit is getting bigger and they want the piece of pie. They want the money, the tax, because it's growing at faster pace. There are billions of dollars being traded every day. If the burgeoning ongoing digital asset market is not adequately taxed, it may add up to huge liabilities which could make recovery difficult in the future. Thus, the proposal calls for immediate approval. So they have mentioned that people are making huge sum of money, and if they do not tax instantly, the moment they take out the profit, they will not be able to recover because people will spend that money and the recovery, the liability will be huge to recover. So what they are trying to implement. So purchase of sale of cryptocurrencies to be considered as supply of goods, and those facilitating transactions like supply, transfer, storage, accounting among others will be treated as a service. So basically they are saying this will not be treated as a currency. It will be rather treated as a goods, as a intangible goods like software services. So many companies in India who provide software licenses, so crypto will be treated in the same category. So value of cryptocurrency may be determined based on the transaction value in rupees or the equivalent of any freely convertible foreign currency. So they will determine the value when you buy the crypto and will be calculated in Indian rupees or any fiat currency. If buyers and sellers are in India, that transaction will be treated as a supply of software and the buyer's location will be the place of supply. So suppose you are buying a cryptocurrency and you are based out of India, so that will be the location of supplier. For transfer and sale, the location of the registered person will be place of supply. However, for sale to non-registered person, location of the supplier would be considered as the place of supply. Transaction beyond the Indian territory will be liable for integrated GST and would be considered as import or export of goods. And IGST will be levied on cross-border supply. So there are basically two things, GST and IG. IGST is basically for the cross-border transaction. Interestingly, the proposal seeks levying GST from July 1st, the very day when the government sought ending bank relationship with crypto exchange. However, the date remains unconfirmed. So, what will be the impact of this news, guys? So there are two scenarios like I mentioned in earlier. So basically, they are not trying to do a blanket ban. So they're not going to ban it completely. you can still trade because they really understand the value of the technology, the value of the blockchain and the cryptocurrency. If they would have to ban it completely, they would have done it way back. So they really want this thing to be taxed, and at the same time they also don't want to lose the tax, the money they want to get from the investors. So they are thinking that okay, from July, if customers, if investors will deal cryptocurrency in cash, then how they will tax it. So the first scenario could be, they can make it completely, let's say, regulated, legal. You can do tradings back and forth, and banks will provide their supports. You can take money in your banks. However, there will be a tax of 18%. So that is the GST. It will be treated like a software, because they are not treating it as currency. They are treating it as a bunch of computer codes, the programs. And yeah, that is true. Basically, the smart contracts or the cryptocurrency are based on cryptography, are based on bunch of code. So they're treating it as a software. Or what they are thinking that, okay, people will avoid taxes if they are dealing in cash, then they will skip taxes. In that case, they are bringing this into the picture that if you're dealing cryptocurrency, you should be registered with GST Council, and it will be treated as a software, like you are a software supplier. So you're transacting intangible goods, and again, it will be taxed at 18%. If you see here, I was just looking for the GST rate for the IT services. So if you see here, GST for the IT software rate for all kinds of IT software supply, services, products, supply on media, electronic download, and temporary transfer of intellectual property is 18% with full input tax credit. So you will be still liable to pay 18%. So in both scenarios, they want their tax. They really want the money. If you remember, if you go back a month back, when we had RBI ban, let me show that to you.
Is to disengage the payment system from that. So all RBI regulated entities, whether it is banks or credit cards or whatever, will not be used for making payments.
But sir, a lot of people who are already invested in cryptocurrencies and crypto assets were reaching out to us yesterday, and about 1.5 million people in India apparently are invested in cryptocurrencies of some sort, suggesting that this is in a way demonetization of crypto assets or cryptocurrencies. What do we now do?
The cryptocurrencies were always demonetized. They were never the money, they were never the currencies. Somebody was mistakenly treating them as currencies.
So it's a dead asset now in their hands?
No, they can still trade amongst themselves. That is possible. They can transfer. That is what their system is. They can transfer by trading, but they can't bring it into the system by using they can also use cash and other means, but not the
So this guy is the secretary at Indian Economic Affairs, Subhash Chandra, and he has clearly mentioned that as this cryptocurrency based on peer-to-peer transaction, they can still do it, and they can do it in cash. So they are actually afraid of, people might skip taxes. Like people will give an example, okay, this guy is saying, let's deal in cash and let's skip the tax. But at the same time, they introducing this GST law so that you'll be taxed 18%. So as per my thinking, my analysis, I think this is the beginning, and this is a welcome step in terms of regulations, and I think it will be good for us. It will provide some sort of favorable environment to deal in cryptocurrency. So this is not going to ban, guys. This is not going to get over soon. So cryptocurrency is here to stay, and if you're still thinking that this is going to go away, I think you are not right. So if they would have to ban it, they would have banned it long way back. So guys, be ready. I think if this deadline is over from July, you have to pay taxes, and they are in hurry. Let me show that to you. So they are basically doing it on immediate basis. The rise of cryptocurrency market is undeniably lucrative for users and governments, as it can represent huge monetary gains in short period owing to the assets volatility and the sector's. Indian Crypto Exchange reported a turnover of Rs 200 crore, that is around 30 million in 2018, equating almost 5.5 million crore in potential tax gain for the government. So treating cryptocurrency as goods and services may take taxation simpler. Treating the volatile digital asset as a service further makes the tax directive easier to live by, as rules are ready present to facilitate that. However, classifying them as a currency would require a change in law, an undeniably complex and time-consuming process. So if they are treating crypto as a currency, again they have to amend the law, they have to change, and it is time-taking process. Therefore, they are trying to treat this as an intangible goods, as a software, and they will tax accordingly. It's good for, I think, investors. When they say traders, that means any kind of trading, investing, or dealing in cryptocurrency. It should not be strictly for trading. So yeah, you have to understand that 18% tax, I think, will have to pay, and I'm happy in both cases. If they stop the relationship with the banks, this thing will encourage us to set up our own exchange and deal cryptocurrency in cash, and I'm happy to pay 18% GST. So what I'm thinking, guys, if this law will be introduced and there won't be any relationship between banks and exchanges, I'm going to set up my own exchange, and I will allow people to deal in cash with proper KYC and documentation, and I'm happy to pay 18% GST. So this could be the baby step towards cryptocurrency regulation, and we should be happy by reading this news. So guys, I think this is it for now. I'm going to consult with one of my friend who is CA, and I think who can provide a great detailed analysis and his perspective on this news, and then I will make another video. So thank you for your time, guys. Thank you for watching. Please subscribe, share. Have a good day.